The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials up 70. You get the Nasdaq up 58. S&Ps are up 20. And gold is down 740 at 1083. You have silver off a penny at 1455. Bonds, you get the 10-year down 21 ticks, the 30 off a point and a half. King dollar's up 211. Volatility is going to stay out here. You can expect it to actually get higher. The last spike higher had to do with the service. Let's see. America's service providers from restaurants to real estate agencies expanded in July at the strongest pace in a decade, putting the U.S. economy on track for faster growth. The Institute of Supply Management non-manufacturing index jumped 4.3 points to 60.30, the best reading since August 2005. Now, that being said and done, what do we have happening out here? So, inside the Dow is up 73. And bottom line is, if Disney wasn't down 10, this thing would be up big. Because there's, I believe, Disney's the only stock that is negative inside the Dow Industrials. It's down in 965. This is, you talk about coming down with a vengeance. It's certainly coming down with a vengeance. And the way what this has done, which is pretty wild, is that we're at 109. We hit 109. 112 is where we are right now. This baby's going to get into this 102.99 area. Inside the NDX 100, what's putting the strength inside the NDX? The NDX right now is up 56 points. You have Activision is up 284. QVCA is up 233. Cognizant Technology is up $5, and Priceline is up 66. Taken away from it on the way down, CERN, Cerner Corporation, is off 567. You get Fox down 163. Discovery's off 149. Inside the, because of the Disney deal, folks, okay, the cable providers, Time Warner, they're all getting slammed, and they're getting slammed pretty good. Let's go over to that gold contract. We take a look at the gold, because what you have is that the gold contract's down, but the gold equities are up. So we take a look at gold right out here this morning, and what you have is this. The expansion that we went when we went topside, well, not topside, but we went from 1079 up to 1104 on the 31st. The bottom of that area is the 1079 area. We've hit 1082 thus far. I suspect what you're going to see is that this is going to hold, number one. Why? Because the first leg down did have some juice in it. We did 9,000 contracts. But you didn't even get to the swing point. The swing point that you had to get to, number one, to talk, walk, and squawk, is 1080. Couldn't make it. What is that saying? That's saying that you still don't have sellers underneath this market. So there's not orders underneath the market that can get blown away. That's what creates monster downdrafts, folks. You need orders that are underneath the market. The sell orders hit those orders, and then you get a cascade on the way down. Bottom line, you don't have it. Bonds. We go over to the bond market. We look at the 10-year first. This is what you have. So the battle lines go like this. The battle lines have to do with do short-term rates go up or not? You know, that's where the battle lines are set up right now. The 10-year is pulling back 797,000 contracts. Well, you're pulling back into 1.4 million contracts and 1.2. So the 10-year is going to lead a lot more than this type of pullback in order to basically get croaked. That's the way this is setting up right now. We go over to the 30-year. We take a look at the 30-year, and the same is applicable in the 30-year. 30-year, in fact, the 30 is even stronger. 30-year is down 1 point and 15 ticks. That 30-year out here is pulling back into 263,000 contracts and 290,000. And thus far, we've done 151,000. 30-year, 10-year, they're setting up for higher price. So it's going to be wild watching this whole bond market shake out. Bonds are still dictating that the S&P, NASDAQ, Dow want lower price. Inside the high volume area out here, this is what you have. Apple's up $1, Disney's down $8.95. You have Netflix up $5.65, Activision's up $3. You have Chesapeake Energy, that's flat. Facebook is up $2. Intel is up 14 cents. First Solar is up $8. Cerner Corporation is down 5. Time Warner is down 3. Inside the Dow, what do we have inside the Dow? This is what you have. Disney is the only negative component inside the Dow. You have, let's see, GM is up by 21 cents. You got Walmart up 99. United Technologies up 61. DuPont's up 67. No big numbers. This is what this is going to be a little trader's paradise out here, folks. Well, what you have, if we go over to the S&Ps again, so check this out. This is pretty wild. You go over to the S&Ps, and what you're going to see is that you have the wide price spread. You haven't got to the swing yet. The swing's a 2009. We've baked 2105. We take a look at this, though. What you're going to see is that, there she is. You're going to see the last spike that we just had. Okay, so watch this. Intraday. The last time we had any juice was 2102. It spiked it. That spike there was at 0930. Your next spike came in, and that spike, by the way, had 81,000 contracts. Next spike, which we're at right now, you're 4 minutes into it, and this is what we had. So you get 6 minutes to close over 2104.75. We're right at it right now. I suspect that, well, the volume's not going to be there. We'll see if the price there. If the price isn't there, what that sets up is this. That sets up the number that it's going after, that it has to basically get up and over, is the 09. So it's 4 handles over where the high was today. You don't get that, you know what will happen is that it'll come back down to where we did it 0920, which is the 97 area, and then we'll see where that shakes out from that particular point. But I do expect as the day wears on, the difference as the day wears on today is that I expect you're going to see a little more selling pressure versus buying pressure. And this is why. The Dow, the NASDAQ, the S&Ps right now should have not only blasted higher, folks, they should be up. The NASDAQ should be up almost 100 points. The NASDAQ right now is up 1.1%. The NASDAQ should be basically pushing almost 2% right now. And why I'm saying that? Because what you do have is that in Europe, they're still up about 1.5%. When they can't perform as Europe is performing, what is that also showing? That's showing that we still have underlying weakness inside the marketplace and the selling inside the marketplace versus the buying aspect. So it's a weighting structure deal that is continuing to happen out here. If we go over to REGN, Regeneron, we take a look at that. That went higher yesterday, had some juice behind it. If we look at the IBB, this baby still hasn't given it up. It's up $3.46 at $3.87. It has tested the 390.05 today, and this is really cool, man, because what this is doing, that tested the 389 area. That's where a downdraft was created with 3.9 million shares. Bottom line, what does that say? That sets up that you're going to get a decent pullback in that. So paradise out here, yeah, it is. It's pretty amazing. SI, let's go to the SIU 5. Let's go to the silver market. Silver still sideways move out here. We are at 19,000 contracts, light contracts. Bottom line, we need buyers in that market. That's if no ifs, ands, or buts about it. We need buyers in that market. Take a look at the commodities in general. This is what you have. We have copper's down 0.7%. You got gasoline up 1.5%. Natural gas is up 0.9. The crude oil is up 0.9. We have gold down 0.6. No big deal. The dollar still hasn't been able to perform out here. It's trying. The dollar, no doubt, is trying to get up and over its last swing point. And you have sellers up there. There's a seller that's just laying at that swing point. And intraday out here, you know, the the bust higher just can't handle it. So it's going to be intriguing watching this whole thing shake out. And what that has to do with, and the swing point we're talking about inside the dollar, folks, is the last swing that was rated out there on the 20th of July. That's 98.31. We hit 98.33, backed off that area. You've done 33,000 contracts, which is good, but bottom line, you're going to need like 45,000 to get up over and get some action. Now, it should get about 45,000 out here today. We'll see whether it can take the price out, or does the volume just die on the vine. The last burst higher in the dollar had to do with the report that was out, that the Institute of Supply Management, that this is the expansion, the fastest expansion in a decade. So 877-927-6648. We go take a look at the Rheingold Resources. Let's see if we get any buyers there. Well, you got Rheingold is up $1.50. We've done 276,000 shares thus far, which is really good. This is interesting. Okay, let's see what is happening here. So you got 11,000 on the open. You get a buyer in there. You definitely have a buyer in there. We'll see whether that can keep expanding. Oh, I know what we want to do. We want to go see if there was any more filings in Apple. So what we had on the 3rd was a filing by 8-4. There it is. 8-4. Oh, is today only the 5th? It is. So they're selling again. Oh, baby. So State Street. Hey, you stay right there, folks. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We have the Dow up 100, Nasdaq's up 60, S&Ps are up 22, gold's off 760. Volume-wise out here, let's see what we have happening, folks. On the NYSE, it's anemic, 169 million. That is not that is actually really low. Nasdaq at this time. Yeah, Nasdaq's low too. We're at 427. Nasdaq should be pushing 500 million at this point. Inside the SPYs, we take a look at the ETF structures. The SPY right now is trading up 177. You have 22 million shares. That's not bad, actually. That's not bad at all. You know, you're going into about 100 million, but that's saying it should be able to do 100 million. The Qs, the NDX 100. You're dealing with 8 million, and that's really good also. That's going after a swing point of 112.49 that had 22 million. It's going into the downdraft of 30 million. You know, but the way that's structured right now, if that volume did stay up, that would have some juice underneath it. The IWM. This is intriguing because this is still pretty anemic. This is just showing that inside the small caps, the small cap is still a weak link here. The IWM is up $1.32. You're doing 4 million shares, and that's going into 40 million. You know, so the IWM, these small caps just have problems inside them, period. Inside the Dow, of course, every Dow stock is positive, excluding Disney. Disney is what's taking it south. And the way Disney is trading, folks, you had a nice dead cat. Here, let's put this up here so you can see. Disney hit a low of 109. It's 113 right now. You know, you get buyers and believers out there. There's no doubt. You know, we'll see how far they can get this up today. Apple, you go over the other side with Apple. Apple's the same way. Apple's just gone from $1.12 to $1.16. Will that help on a counter trend bounce? No, because what you are going to have out here now is this. If we take a look at, let me put this Apple, I'm going to put Apple up for you on a weekly basis. And what you're going to see is that, there she is. So Apple's taken the swing point out. The last swing low on Apple, 119.22, 275 million shares. Thus far, we've done 232 million shares. So Apple is going to have the volume, meaning it took out this level. The real key is that does it close also under the price of 119.22? You know, at this particular point, it looks like it actually will close under that area. We go take a look at the Exxon Mobils of the world, because the Exxon Mobils, the Chevrons, they continue to basically get into lower price. And it's pretty amazing on a day like today that they can't even get any juice. Exxon Mobil's up 65. You're trading at 77.83, but bottom line, the way that is out there, that oil still wants lower price. We go look at Chevron. Chevron's at its lows. You know, Chevron's trading at 85.57, 36 cents, and can't handle price. Absolutely just can't handle price. the gold, silver, bonds. Oh, let's go to the TLT. So the bond market. We take a look at this TLT. You put this on a daily basis. Okay. So the TLT is a 20-year plus bond ETF structure. This has come off the lows. The lows that we're talking about come off $1.15. You go to the top of the range. The top of the range thus far has been 123.57. That was the swing high that was established on the 29th of May. We got into that swing high this week, the 3rd. And watch how we got into it, folks. When we got up there at 123.75, we did 11.7 million shares. The last swing high that had been out there on the 29th did 7.9. So what does that mean? You came into the swing high, had the volume. That was 100% move or move, by the way. Okay, so that's what equities, currencies, everything likes to do. When they do that, that also means they're really strong. Now we back off. Now watch how we backed off. Yesterday, you backed off. We hit highs at 11.7 million. We backed off yesterday with 6.4 million. Today, we're at 2.6. We'll probably do 6, 7 million. Bottom line, what does that mean? That means that the TLT is setting up for higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back. Dow is up 104. NASDAQ up 63. S&Ps are up 23. Gold down 670. Silver's flat. 10-year down 18. 30-year off $1.50. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metals CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 100. You get the NASDAQ up 63. S&Ps are up 20. And inside that Dow, folks, bottom line is that, well, your travel is down 12 cents, but that's it. The culprit out here is Disney. So let's bring Disney up and take a look at, you get a gap down. Disney has been absolutely on a tear, too, by the way, okay? This was a one-way trip. Now, when you take a look at it, when I say a one-way trip, in August of 2011, Disney was at $29. And when you take a look at this, I mean, it just, bottom line went right to 120. You had one pullback, which was in the October of 2014. Now, that's where it's going, folks, okay? This is what's so wild about this, because we'll see how it gets here. But Disney, yesterday was up at 122. It hit 109 today. The high of the... Let me put this back so you can see this October 2014 area. The high of that area is 91. And when you take a look at this, right there, yeah. Pull this back a bit. Whoops. That's where I expect this little baby will migrate down to. Let me open this chart up for you so you can see it. Kind of there it is. So that area there, 91, 98. That's where this thing wants to shake into. We've done 25 million shares today. So what you have there is that you have a vicious expansion off its highs with volume. And when you get volume off the highs, folks, what it sets up is much lower price. Now, let's go back over to Apple, okay? So we take a look at Apple, and what we have is this. When we had brought up Apple yesterday, we were looking at the context of the large sellers, and in fact, are they moving out? What I speculated is that when large sellers move out, folks, they basically, once they start, they continue. So what had happened is this, is that you had State Street Corporation, they had done a filing on the 3rd that they pushed out, I believe, was 6.4 million shares. Bottom line is that it looks like they pushed a couple more million out, because now we have a filing as of yesterday, the 4th, that we get 8.6 million shares that were sold. Now, the key is going to be, do we have any other filings out here inside of Apple? So if we take a look at this, you had Deutsche Bank, the last filing, well, that was the 30th of June. They were buying. Yeah, no, at this point, we don't have any more. We'll see how this does shake out. And we'll see. We got to remember that number. That number thus far on State Street was the 8.2 million shares. You know, Apple right now is up $2, and Apple is actually coming right into one of the downdrafts that were created yesterday. That downdraft, the top of that downdraft is 117.70. You know, I mean, the way this market is out here point-wise right now, they're just buying just about everything. That's point-wise. Percentage-wise, you know, the Nasdaq's up 1.3, which is the Nasdaq is getting the juice right now. And the FTSE is up 0.8. The DAX is up 1.6. The S&Ps are up 0.8%, and the Dow Industrials are up 0.6%. So what you do have is that the Nasdaq has the juice. The composite itself is over the swing point that was established out here on the 31st. It's right at the swing from the downdraft. Now, that would be if the composite closes where it is here or higher, of course, you're going to the highs. 5167 is the number. Where 5167 is, folks, 67 and 63. They both line up. 63 is the high that was generated on the 23rd of June. The 67 level is where the downdraft occurred last Friday on the 24th. Now, when we take a look at this, and we'll set the volume characteristic up with it, what you have is this. It's 2 billion shares on the 24th. So what you'd be looking at is this. You'd be looking at, number one, can it take out the price? And number two, does it have higher volume as it takes out that price? Because that's the test. We are right at the level of that test right now. And on large counter trend bounce, which I think this is, those numbers are always really important. And if you take a look at the aspect of the fast charge higher and what is bringing it up higher, inside the NDX 100, this is really a trip, because what it is, you don't have, Activision is the leader. That's up 311. You get Cognizant, Liberty's second at 219. Cognizant Technologies up third at 458. That's not a big number, man. That's not real force underneath it. So what that's saying is that inside the NDX, that is saying that there's other stocks that are strong in there that have brought it up this high. That being said, what you have is that the downdraft availability is huge, because you get Cerner down 640, you get Discovery off $1.80, you got Fox down $1.70, and you got the Discovery, the K shares down 145. What it would take is that it would take for the NASDAQ composite, the NDX rather, to come back, it would take a selling effort once again on Apple. And Apple is right where it could get sold. Actually, Apple said 116.92. It's actually 117.70. So we'll see where that shakes out. And then, of course, we go over to the biotechs. The biotechs just don't seem to have any juice. Everything, it looks to me like everything was put into the biotechs has been done. So your availability of a sell-off, not that they want to go dramatically lower, that they just taking profit, is there. Why? Because Regeneron was the last big biotech to come out with numbers. It gapped higher, big time too. Went from 546 up to 605. You're at 587. You go look at Amgen. Amgen is trading out here. Let's see. Amgen is trading at 175. No big deal. Biogen, which is the weakest stock, that is up $6 at 336. Celgene is up $1.58. Gilead is up 91 cents. So when you take a look at that aspect, your probability is that you're going to get a bit of selling inside the biotechs, and we'll see whether that ends up affecting the NDX 100. We take a look at the 3Qs, the testing on the 3Qs. We've done 9.7 million shares. Now, that has dropped off dramatically. If you remember, when I started the program 40 minutes ago, that was at 8.2 million. So for 9.7 at 8.2 in 40 minutes, that is a substantial drop-off in volume. I mean, big time, too. So let me just look at this for a second. Yeah, and you can see it on the 10-minute, too. On the 10-minute basis, what you had. First 10-minute, you did 1.9 million. Second, 1.9 million. Third, 1.3. Fourth, 1.7. Oh, this is sweet. Okay. Then you dropped off to 700,000. So check this out, folks. Last 40 minutes, sell away, baby. Sell away. Here we go. 1.1, 700,000, 600,000, 500,000. See ya. Don't want to be ya. This is wild. Let me go look at the S&P. That's, folks, when you're talking about that, when you're talking about a 40-minute time span, that's insane, okay? So check it out. Here we go with the S&Ps. S&Ps, SPY, 5 million shares, 2.5, 2, 2, and 1.5. So the S&Ps did it too, but the NASDAQ, forget it, man. The NASDAQ, there was 0 buyers up there. And you're talking about 0 buyers up there, by the way, for 40 minutes, okay? That is, no one's in the store, given the product, distribution in spades, get stuck with the product, the trap door opens, see ya, don't want to be ya, and I suspect what you're going to see out here is at the swing area, this is going to be wild watching this thing shake out, because that is saying that the swing area from the 31st is not going to hold. And if this market can't hold a swing point from the 31st, folks, it's insane, because your swing is much higher than that. And the swing in the Qs would be 112.49. You know, the S&P hasn't even got to that swing yet. So we'll see if the 112.49, in fact, can hold inside this market. Some of the high volume stocks in a low volume market out here. You have Bank of America is up 18 cents. Genworth is down $1.11. Facebook is up 258. Let's go take a look at Facebook. Facebook, no doubt, looks like they're taking over the world. Yeah, that's just a counter trend bounce. Interesting. So Facebook's been on a tear, no doubt about that. Come off the high with volume, though. You're at 96.66. This is a sell away at 97, basically. Interesting. Google, let's go take a look at Google. Google out here is up 15 bucks. You're at 644. Goes higher, gets up to a price point of a 678, and you know gets back inside the gap. You know, Google's going to close this gap. That gap there is at 580. It's pretty wild looking at that 580, man. Oh man, I'm telling you, this is going to be a wild day, folks, and it's all over the place too. We go back over to the dollar index again. What you're going to see inside the dollar, man, this is just all of this is absolutely counterintuitive too. There's no doubt about it, folks. Okay, because when you look at the context of the Fed going up on rates. You know, the dollar should go up. But you know what? It's saying to me that the Fed's not going to go up on rates. You know what's wild, okay, is that this morning on CNBC, they had the Fed governor on it, and Kernan asked them a great question. And Kernan, I don't agree with a lot he says and does, but anyway, this question was really good. And what it was this, is that the Fed governor was saying that he's data dependent, and that he was going to wait for the data to come out to see what he's going to do in September. And it was a very simple, common sense question, which Joe doesn't normally do. And what it was this, is that, okay, you're telling me that after 6 years of 0 interest rates bank to bank, that you have to wait another month and a half to find out what you're going to do in September. And, you know, that put everything kind of in perspective, is that the bureaucracy always needs something to basically say in order to, you know, really figure out, okay, what do we want to do here? The intriguing thing inside the bond market is that the rate structure has nothing to do with how you and I are going to get money. Because what that has to do with, folks, is the curve of the rate structure, meaning the curve of the, I'll put this up for a second. I'll just show you how this shakes out inside the bond structure. So it has to do with, I'm going to put a 2-year up first. It has to do with how the discount rate is versus a 2-year versus a 5-year. So when we take a look at this, watch. The 2-year right now is at 0.741%. The 5-year is at 1.65. The 10-year is at 2.2. The 30-year is at 2.9. So it's the curve yield that makes the difference of what happens with our interest rates. The Fed itself, bank to bank, can absolutely go up from 0 to 2.25 without affecting it won't affect the long term. It won't affect the 30, okay? It should put pressure on the 10. However, it doesn't have to. The last time that they went up, it did not put pressure on the 10, you know? So that in itself is going to get intriguing to see, okay, where does the rates go? I can tell you, if you happen to be in the housing business or you're looking for a jumbo loan, what J.P. Morgan has just done this morning is opened up this market in an incredible way. As of tomorrow morning, so a jumbo loan is over 417 grand. Today, you need 20% down payment. You need a FICO of 740. Tomorrow, guess what? You need a 670, and it's 15% down, and a FICO. Here, stay with me. This is Tom O'Brien. This is TFNN. We're coming right back, folks. Dow up 80, NASDAQ up 59, S&P's up 20. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So if I want to go over these numbers again, because inside the real estate market, folks, it's always about what is your signature worth, okay? That's all it's about as to where prices go. So a jumbo is over 417. The J.P. Morgan at one point was one of the largest writers in the mortgage market. Wells Fargo is the largest writer, basically. But guess what? J.P. Morgan Chase, they want more of the marketplace. That's what it comes down to. What has happened also is this, is that the jumbo loan market, is the most stable market. Okay, so loans that go south in the jumbo market are only 9% versus pushing almost 14% below that. So bottom line is that they can push out the paper. The ramification, though, is huge if, in fact, you have houses that you are looking at over there that you want to buy, or you own that are over 417. Because what I expect it's going to do, and it will do very quickly, it's going to bump up those prices. And this is why. So as of today, you need a 720, and it's 20% down. As of tomorrow, it's a 680, and it's 15% down. That's the first part. Second part's even bigger. The value is going up to $3 million, okay? So right now, if it's Wells Fargo, it's 1.5. Bottom line, that they're opening the spigot up. As you open the spigot up, what does it do? What it does, folks, is that, as particularly the 680 number, the amount of folks that have a 680 or a 700 versus a 720 is huge, okay? It's tough to keep over a 720, really, 730, even when you have great credit, because it just has to do with how much credit you're actually pulling down, not whether you're paying your bills, okay? So that area between the 720 and the 680 is absolutely huge. If you go look at the scale on it, in fact, maybe later on this afternoon, when I do the afternoon show, I'll show you the scale on it. The scale, the national scale on that is pretty dramatic, is really dramatic. And again, it has to do with the aspect of how much credit you're pulling down, not most of the time, not whether you're paying your bills, So what does that set up? Well, it sets up higher real estate prices. That's what it comes down to, and looser money that's out there. So we'll see where the whole listen, I'm elated. That's the bottom line. We own a lot of properties, and bottom line is that the looser they get it, the better off it is. Dow. Guess what, folks? There's zero volume in the Dow. Dow right now is pushing 228. That is low in an extraordinary way, not in a small way. NASDAQ Composite, also pushing low volume, 5.9 million. So what does that set up? What that sets up, folks, and you stay right there because Mr. Basil Chapman's going to be coming up next, growling and prowling with you. That sets up more selling as we go out through the day, and we'll see if, in fact, the S&P hasn't been able to get its swing point yet. The NASDAQ has. The NDX has, rather. The number and the NDX 100 is that 112.49 area. We'll see whether it can do it. It hasn't got into the downdraft from Friday yet, but I expect as this day wears on, you're going to see a little bit more volatility, and you'll see some spikes to lower price. And it's going to have to do with just the high flyers that are out here. That's what this whole thing's all about. And the thing that is amazing, even though Apple got whacked yesterday, it's still about Apple. Why? Because Apple is just putting that extra juice into the NDX 100. It's only up $2.33, but if Apple goes flat, that NDX 100 will pull back just enough, meaning, another 10 points. You're up 70 right now, pulls back to 50 points up, 60 points up. That's not going to be enough. Why is it not going to be enough? Because that swing point, that's where it's hanging, right at that swing. It's not a make or break swing point, but it's certainly, once you get over it, you should be able to hold it. You stay right there, folks. I'm Mr. Basil Chapman's coming up next, growling, prowling with you. Dow up 90, NASDAQ up 64, S&P's up 21. Basil's coming right up, folks. Have a great one. Have a safe one. Look forward to speaking to you a little bit later.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.